Hey everyone, trust you are doing okay. Alright, welcome to today's video, and in this video we are going to talk about something spectacular. Most of the things that we didn't talk about in the previous video, right? So we are still on Forex basics, and in this video we're going to be talking about a few things. It's going to be quite short, right? Because we just want to have a brief understanding on what some subsections in the forex market actually mean and what they actually do in those subsections. Right now, the first of them is what the fundamental versus what the technical analysis, right? So there are several ways in which we analyze the forex market in terms of what we expect price to do next and data of price and the rest of that, right? So it's called fundamentals and technicals, right? So that's one section, and then the other section we're going to talk about risk management. We want to understand what does risk management mean in terms of forex market, right? So yeah, protecting your capital, right? So the next stuff we're going to talk about trading psychology and mastering your emotions, right? So basically in this video we are just going to talk about what this concept actually means, and then as we progress further I'm going to give you tips and more videos on how to do what apply technical analysis, fundamental analysis, yeah, best way to handle risk management, and also how to stabilize and balance your trading psychology to help you trade like a robot, right? So without further ado, let's just dive into the short video of today. Yeah, also resources and tools. First off, let's talk about analyzing the forex market, right? So there are two different ways we analyze the forex market, which is either fundamentally or technically. Okay, so yeah, analysis just helps you to do what try to give you a more precise way of predicting or forecasting the next movement of price of a particular currency pair, right? So yeah, it's just something that we use to build our trust and our confidence in what pointing out the next direction of a particular currency pair. So first off, we have what the fundamental analysis. Now, what's the fundamental analysis? Now, think of fundamental analysis as what understanding bigger picture. Okay, so it's like assessing a company's health before investing in its stocks. Now, before you invest, whether it's a company or whatever, before you invest in anything, right, you have to do background checks, right? You have to go back, make your research, look at the previous success rates of that particular company or that particular business, right? Look at what you stand to gain and you start to lose. Look at the future probability of you making progress, okay, in that particular current or in that particular business or in that particular company, right? So also relating that to forex, also fundamental analysis is just the same thing. Okay, just like you making research of a particular currency's health or a particular country's health. Okay, so once you've normally if the economy of a particular country is stable, right, the currency of that particular country is going to appreciate, right? So also if the economy of that particular country is not stable, right, the currency's health is going to depreciate, right? So basically we just try to use some economic data or some economic view or research to try to analyze how the health of a particular currency is going to look like in the future. Okay, so that's just what fundamental analysis is. Okay, so we just tend to use some data, okay, some research and some many other things, right, with things like interest rates, inflation, GDP, right? So there are so many things that we look out for in terms of fundamental analysis that we analyze, okay, and do background checks in order to do what forecast if that economy is going to be stable and the health of that particular country's currency is going to appreciate or depreciate. Okay, so let's talk further on fundamental analysis. Let's also look at some other things, right? So yeah, in forex, what I just explained in the last slide just simply means what you are studying the economic and political factor that can influence a country's currency value. Exactly what I explained earlier, right? So once you've done all of this analysis and everything, it just simply means you are studying the economic and political factors of that particular country. Okay, so some of those factors may include what um economic indicators. Okay, so just now I want you to imagine you are checking a car's performance, right? So you might look at the fuel efficiency. Okay, you might also look at the engine and some other things. Now take the fuel, okay, the fuel efficiency as the GDP. So just like how you analyze your car before using it, okay, so also in the forex market you need to analyze the economic data of a particular currency of a particular country, right, before you decide to invest or before you decide to buy or sell that particular currency of that particular country, right? So that's just what it means. There are other factors like inflation rates as well. Let's just see. Okay, so sorry, interest rates, right? So think of this as comparing what interest rates on loans. Okay, if one bank offers high interest rates higher than others, you might also want to invest in money or buy that currency, right? So there are other factors also like political stability. Consider it as what evaluating the stability of a government. So it's just all about background checks, right? So understand the stability of a government. Okay, so how often does the government attract foreign investors? Okay, how often or how well does that country do what attract foreign investors, which can lead to increasing what the demand for its currency, because it's when the particular currencies the particular country's currency is in high demand. Okay, that's when that country's currency is going to do what appreciate. So there are many things you need to put in check in terms of fundamental analysis. I'm not actually a fundamental analyst. Okay, I am solely based on what on technical analysis, right? So pardon me if I'm not able to explain some of these things thoroughly, right? So yeah, basically this video was just meant to give you a skill through and a skill reading of what fundamental and technical analysis is, and some other concept as well. Okay, so let's just move and see what we have next. Now, fundamental analysis is about understanding the why behind currency movements, right? So it's like predicting the future value of a car by looking at its performance history. Okay, the manufacturer's reputation and market demand. This just simply explains everything that I've been talking about previously, right? So I said before you invest in a particular currency, right, if you are a fundamental analyst, you must have done background checks, you must have done your research, okay, which is the why. Okay, why is this currency like this? Why? What is happening? Okay, right, you must have looked at some history. Okay, the currency's performance in the past, okay, and in the present, in order for you to now predict what is likely going to happen what in the future, right? So now let's talk about technical analysis. Now, what is technical analysis? Technical analysis is more like what studying patterns. Okay, it's akin to what recognizing trends in the stock price chart. Now, simply, okay, let me give a simple and straightforward layman's term, right? So technical analysis is just kind of using some tools, right? There are some set of tools that you can use, okay, to try to using some set of price actions that have printed in the past and in the present, okay, to try to forecast what's going to happen, okay, in the future, right? So that's just what technical analysis is. Now, more explanation. In Forex, traders use historical price data and charts to identify patterns and trends. Okay, so they look for shapes and formations, just like seeing clouds form patterns in the sky, right? So, for example, if you see series of higher highs and higher lows in the currency's price chart, it's like spotting a trend of sunny day, okay, suggesting an uptrend. Now, conversely or vice versa, if you notice lower highs and lower lows, it's similar to identifying what a pattern of rainy days indicating a downtrend. So I just use this to illustrate how the basic aspect of technical analysis work, right? Because in technical analysis, we have something called trends, right? So trends are made up of two or let's say three, right? The first of which is bullish trend, the bearish trend, and the ranging market, which is actually very popular, right? But in a bullish trend, it's made up of higher highs and higher lows, right? So basically, once you see higher highs and higher lows, it's a formation that forms that indicates to that technical analyst that what price is moving in an upward direction, right? So the bullish market moves in an upward direction, while the bearish market moves in a downward direction. So basically, technical analysis is just those signs that price gives you. Okay, so it gives you signs that it's about to do what move in a particular direction, right? So through chart patterns or through some other stuff, because there are so many strategies out there in technical analysis. There's ICT, there's SMC, there's price action retail trading, which makes use of what chart patterns and candlestick formations and the rest of that, right? So basically, technical analysis just helps you, give you signs or gives you some clues to help you do what, okay, to help you predict what's going to happen next in the future, okay, with a certain amount of accuracy, okay, depending on your edge or your strategy, right? So yeah, technical analysis is not something difficult. It's something that you can actually learn as you progress onwards, and I'm going to teach that in my YouTube channel. So basically, if you haven't subscribed at this point, yeah, you definitely want to hit that red button, right? So yeah, technical analysis focuses on the when to buy, it focuses on when to buy or sell based on the historical price patterns, right? So it's like predicting the weather by observing the skies patterns and using that information to decide whether to carry an umbrella or not, right? So it's just I'm just actually using real life examples to try to illustrate what it actually means, right? Because most times, yeah, if you just see a cloudy, if the clouds in the sky just change to, let's say, somehow dark, okay, you should have a clue that what it's just a clue that was telling you that what rain is about to fall, right? So you might need an umbrella. So also in technical analysis, if you see price start making series of higher highs and higher lows, okay, it's a sign that what price is about to move to the upside, right? So it's giving you an indication that price is bullish, okay, and the trade is what in an uptrend, right? So basically you want to buy, right? Also, if you want to sell, lower highs and lower lows, okay. So although there are much more things to look out for before um other than that, but I'm just using that as an illustration to help you understand what it actually means, right? So enough talk, let's just move to the next and understand, yeah, what risk management is. Okay, there are more stuff here. Okay, so in forex, should I use the historical data? Okay, I think this is what I just talked about, just some, yeah. Okay, risk management. Now, once you've gotten your edge, once you've understood technical analysis, okay, let's say you want to be a technical analyst or you want to be a fundamental analyst. Once you've understood at least one of these ways of analyzing the forex market, the next thing you want to do is start trading, right? Because you've understood your fundamental analysis, or probably you've understood your technical analysis, and you are now sure and confident that what you have like a 50% win rate in terms of predicting market movements, or let's say 60 or 40% win rates in terms of what predicting future market movements. And you now say, okay, I am ready to fund my account and I want to do what I want to proceed in my forex career, right? So risk management is something that you do not want to neglect at this part of your forex journey, right? Because risk management is what is going to help safeguard your capital in the long run. Because once you've applied concepts like leveraging and concept like spread, once you include the spread concept, leverage concept, and volatilities in the market, right? Some of all these concepts are going to be a barrier, okay, in terms of you making potential profits and potential losses as well. So in order for you to make more potential profits than your losses, risk management is a very resourceful tool that you need to actually master. Okay, you need to master risk management if you want to safeguard your capital, right? So risk management is your safety plan in forex trading, right? It's all about protecting your capital through strategies like you setting stop loss orders, right? So there's something called stop loss, right? So because most times you might, after doing your analysis, right, your technical analysis, and you've seen that, oh, I think price is about to move to the upside, right, and you place a buy trade. Now, most times, right, you might be wrong, okay, and price starts selling instead of buying like you would have originally expected, right? If price starts selling instead of buying, you are going to be in loss, okay, but there's a way you can limit your loss, and that is what by using stop loss orders, right? So if price comes to a particular certain level of which you can no longer handle that loss, okay, let's say you have a $20 account and you can only bear to risk $5 per trade, right? So your stop loss order can help you do what, cut off your trade or cut off your position or stop your position running once you have hit $5 loss. Okay, so that's what risk management is. Risk management is all about using stop loss orders, using a feasible stop loss orders. Because when I talk about stop loss order, there are most persons out there that use 50 pips stop loss, right? I've talked about pips, right?
I haven't,
Pips is
but we
what
will in the
percentage in
next
profit,
or upper
like
video.
is the way we calculate price movement, right? So there are some people that use 50 pips stop loss, and if you merge that with some high amount of lot size, it's going to blow up your account. Okay, for you using a $20 capital, okay, in your balance, using a 50 pip stop loss is not advisable, right? So you need to consider some certain things you need to consider in terms of risk management, right? So the amount of stop loss, I think I'm going to make a separate whole video about risk management, because risk management is actually one of like the core things you need in terms of what yeah, your first journey, right? So stop loss order is going to help you a lot. Okay, then also diversifying your trades and using proper position sizing. Okay, because there are so many traders out there that just you just stay and open like 10 positions. Okay, you just stay, just open. Okay, when I talk about position, don't be so overwhelmed. Position sizing is just like um opening multiple trades, right? Let's say you're in a running position. Okay, then you open another. So any particular trade that you are in, okay, you're actually in a position. Okay, so you're using proper position sizing, using proper lot sizing. Okay, so your position sizing also includes your lot sizing, right? So and everything in that position. Okay, and make sure you are able to limit your opening of positions to a certain amount that your account can take, right? So risk management is very broad, and that's why I say I'm going to make a video on that. So it just ensures risk management just essentially ensures that what you can navigate the uncertainties of trading while safeguarding what your investment, because risk management is key. Okay, so a money at hand is better than what, I don't know, complete the statement. Let's move to the next. Now let's talk about trading psychology, and then we call this a day, right? So trading psychology is just all about understanding how your emotions are, okay, like fear and greed, and how they can impact your trading decisions. Okay, because that it's a very core concept, okay, in terms of forex, because most things that limit so many traders out there is what is trading psychology, right? Because most times your position might be in profit, and then you just close your positions, okay, out of fear that the market might just reverse and hit your stop loss, right? So also greed as well. Most times you might have hit your target of the day. Maybe your target of that particular day is to make $10 profit, but your position is running like $15. Instead of you to close, you have hit your target. Instead of you to close, you will not close. You are greedy. You still think that price is going to move forward forever, right? And then eventually price is going to come down and hit your stop loss, right? That's if you did not break even. Price is going to come down and hit your stop loss. So greed, fear, FOMO means fear of missing out, because there are most times that you want to actually take a particular trade. Price have not hit your limits yet. Price has not either hit your buy limits or your sell limits yet, but just because you just see a single candle start moving upwards, you just feel like, oh, price is about to leave me, I need to jump. Price has not hit your limit yet, why rush? Okay, so you just force enter a particular trade, right? So FOMO just means force entering a particular trade without waiting for what your buy limit or your sell limit to get hit, right? So there are many factors that can hinder you out there in terms of what trading psychology. So it's when you are able to keep a balanced mind, right? It's when you're able to keep a balanced mind in terms of decision making. That is when your edge is going to play out massively. Okay, so maintaining a disciplined and rational mindset is key to what successful forex trading. Okay, so just as a steady hand on the steering wheel keeps a ship on course during a storm, a calm and composed mindset is what's essential to navigate the ups and downs of the forex market. Because if you don't have a steady hand, your ship is going to do what? It's going to somersault, right? So you need to keep calm and do what? Embrace the fact that you are not the owner of the market. Just let your edge play out, right? So yeah, thank you very much, guys, and I'll see you in the next video. Please and please help me. Do me a favor by what? Subscribing to my channel. Thank you very much. Peace out.